Mining Scout auf der Edelmetallmesse in München, jetzt mit Jordan Eliseo. Jordan, it's a pleasure to have you here at the Mining Scout booth.
Thank you very much for the invitation. It's been a really good trip to Germany so far.
Oh, that's nice to hear, except for strike, of course. But you'll have to apologize for that. It's just a matter of fact right now. So, could you please give us a short introduction on your person and your background?
Yeah, sure. So, I've been in, I guess, the financial markets for nearly 20 years now. Spent the last 10 years as an investor in precious metals personally, a little bit over 10 years, and the majority of my time, I guess, in finance was with larger asset management companies, helping run and analyse, large diversified investment portfolios. Was always really surprised that gold didn't play much of a role in those portfolios, and so for the last few years I've been working for ABC Bullion, which is Australia's largest private bullion company. So we do refining, we obviously do bullion sales, and we also have private vaulting facilities in Australia. Company's been around for over 40 years now, so yeah, really excited to be over here in Munich, and was thrilled to be asked to talk at the conference.
So Australia is a wide and open country with a lot of operating mines and a lot of opportunity in the future. So what do you think about the recent drop in several commodity prices like gold, silver, iron ore?
Yeah, look, iron ore is obviously the big one that everyone pays attention to in Australia, because that's by far our largest commodity export, and I think as of this morning prices are down around $75 a tonne, so they've almost halved, I think, in the last 12 months, which is sort of playing havoc with company profits. It's going to play havoc with government deficits. Budgets are going to be way lower than what was forecast, particularly in Western Australia, which is obviously the home of sort of all mining, not just iron ore but gold as well. Look, my view on iron ore is that companies in Australia and indeed the world over are still going to expand supply. So BHP and Rio have, I think, increased supply by 17% and 10% respectively in the last year. Port Hedland is now shipping 38 million tonnes a month, I think. So whilst we've had this huge decrease in prices, so far we've seen this huge increase in supply from the Australian miners. I think going forward though, there's going to be some real pressure for some of the more marginal producers. On the gold side, yes, we've obviously seen prices come off a lot. We're down now about 22-23% in Australian dollar terms from the highest they were. So there's been unfortunately some layoffs and some contraction in the gold mining industry. I'm relatively hopeful that we're getting closer to a bottom though, and I'm quietly confident that the actual best days of the Australian gold mining industry are yet to come.
Oh, that's very nice to hear. So you're saying that production is increasing. Of course, share price of the company is going down. Do you see any increase in investment from, let's say, foreign country investors in Australia? Yeah,
in terms of production of iron ore has been increasing, not necessarily of gold too much. Look, I think, again, with Australia, it's very important to realise that there's a difference between, a lot of people are expecting there to be some kind of bust in the mining industry now. I don't necessarily think that's going to happen at all. It's just not going to be as good as what it was. So if you look at our terms of trade, which is effectively the price we were getting paid to export iron ore and coal and gold and all those things, that went to the highest level it ever was by 2011. Since then we've seen that come back a little bit, and it'll probably continue to ease. The bigger question and the bigger impact on the Australian economy though was actual capital investment in the mining sector, and that reached an absolutely incredible 8% of GDP basically by last year, which typically it had been more like 2% of GDP. So going forward, again, that number's going to pull back a little bit. So it's not necessarily that there's going to be any kind of bust. There will still be investment in mining in the country. It's just not going to be single-handedly capable of making the economy grow like it had been up until only a couple of years ago.
Do you see any mines to be closed in the near term due to lower prices? Because right now majors are selling assets and others are still buying.
Sure.
There's no big closures, at least announced publicly.
No, not that I'm aware of right now. And look, I really hope not on the gold mining space. As I say, I know that there have been some layoffs in the industry, but I'm hopeful that with the sort of capital management and cost control focus that there's been in the last couple of years, that most of the mines are going to be able to stay open and keep producing. the gold mining industry, particularly in Western Australia, is incredibly important to the economy. There was, a couple of years ago, there was over 30,000 people employed directly in gold mining across the country. I think 25,000 of them in Western Australia. They're really important to the local and regional communities where they operate. So, whether you're bullish or bearish on gold, obviously I'm a bull, which has been a good place to be for 10 years, not so great for the last 2. But irrespective of whether you're bullish or bearish on gold prices, the actual importance to the Australian economy shouldn't be understated. So, for a number of reasons, I'm really hopeful that we're getting closer to a bottom, and that, as I say, gold miners can continue to expand and continue to operate, because we need them to be functioning well, particularly as other parts of the mining industry like iron ore and that are coming under increasing pressure with prices doing what they're doing.
What do you think, how long might this pullback, this drop in prices last until maybe producers or the country might suffer from it? Of course they're suffering right now, but until there's damage that might take some time to be reviewed, or let's say it easier, how long do you think it may take for commodity prices to go up again?
Yeah, look, I feel more confident talking about the gold price than I do other commodities, only because gold is obviously a monetary metal more than it is obviously rather than an industrial commodity. So I am quite concerned for as I say, the future of iron ore and some of those commodities, in the sense that I definitely think that the glory days for those are well and truly past. Gold, I think we're in the process of completing a really difficult bottom, which may continue for another sort of 3 to 6 months, that we still see weakness. If prices go much lower, then there's going to be a lot of companies having to decide what to do with their operations. But my belief is that we are only halfway through this secular bull market in gold. I think that prices will go substantially higher in the coming years, and I actually think Australian dollar gold miners are going to be incredibly profitable. Those that can sort of manage costs right now and make sure that they're run efficiently. I think we'll see the Australian dollar fall more in the coming years. So if we get a combination of rising prices in US dollar terms and a weakening Australian dollar, then, as I say, the future for Australian gold miners could be incredibly bullish.
Okay, thank you very much, John. It's been a pleasure. Have a nice time in Munich.
Thank you for having me. Cheers.